Well, hello everyone. Can I echo comments earlier on thanking Pal for inviting me to speak at this event. I got here just before the first coffee break, and as I was walking in, Pal handed me a tray with 5 neat gins in it. And I spent the first 5 minutes of my time here sipping neat gin in the corner, learning the science that I never really knew about. So I'm completely out of my depth. In case you wonder who I am, my name's Chris Pitcher. I'm a financial analyst. At drinks parties, I can assure you that's a much less exciting introduction than saying I own my own gin brand. So I'm very mindful that I'm an observer of an industry surrounded by a lot of people who've had the courage and temerity to go out there and actually do it. But what do I actually do? My job involves numbers, graphs, spreadsheets, building models, trying to work out cash flows and predict share prices, trying to use Kathy's parlance, trying to find the crocks of gold and separate those from the crocks of other stuff. So I don't deal with botanicals, I don't deal with stills, copper or otherwise. I have a rubbish palate, but I've been doing it for 20 plus years. Age in my job tends to be an advantage over time because you've seen cycles and you've seen things come and go. And the remit for me was to give a bit of a quick overview on where I saw the gin market and where ultimately, slightly grubby word, you can try and make some money from it. Because as much as it's passionate and lovely, to keep that passion and love going, you have to keep funding it and paying the staff and so forth, and the taxman. First of all, some data. Actually, first of all, there'll be quite a lot of data in this, apologies. I've chucked in a couple of maps to lighten it up a bit for you, but the gin world, it's kind of, I started covering the gin industry, the drinks industry, writing investment research back in 2000. I was a software analyst before that, so I saw the dot-com boom and burst, and then started covering businesses with balance sheets, real products and stuff like that. And I will be very honest, for the first decade and a half of my career, gin was always on my to-do list. At some point I'm going to do the really detailed gin model and get to know it, but it was really wasn't in vogue. But there's been a well-quoted phrase recently, the genaissance, the sudden explosion in growth that we saw around 2013, 2014. And it really was quite profound. You saw the industry grow at about 7% between 2013 and 2019. That was roughly twice the rate of the premium spirits market. World spirits consumption was broadly flat during that period. So, like many things in life, if you stand still long enough, the cycle will come round for you. So the question here is, how much legs does the gin industry or the gin cycle have? I probably don't need to remind the audience here how difficult it was in 2020. In March 2023, 23rd of March 2020, we hosted a call for our clients, and we were really staring into the abyss. We had no idea how to model a supply shock like we saw. People not being allowed to go to the pub, people not being allowed to leave the house. These sort of things we hadn't seen before. And so being down 2%, which is what the industry was, actually proved incredibly resilient. The broader spirits market was down about 6%. And the good news here is, this is IWSR data out recently, is the industry recovered, rebounded, and it's pretty much back on trend. It's about 9% above where it was in 2019 levels. So that's the bit of good news. It's going to be a bit of good news, bit of bad news today, and hopefully finishing up on a bit of good news. That's the brief anyway. Now, using the Renaissance idea, gin was a later Renaissance. When I first started travelling talking about the spirits industry back in 2000, it was all about white spirits. At the time, whiskey had sort of fallen out of fashion. It had become old-fashioned. That's my only cocktail-related joke, don't worry. It was all about vodkas, it was about tequilas, it was Sex in the City with cosmopolitans and the like. It was a buzzy, blingy, if you remember that phrase, type of world. And gin sort of sat there in the background, being drunk by people who'd been drinking gin before. It hadn't really resonated with the younger crowd. Rum started to show a bit of interest internationally. People started getting aged rums particularly. And then whiskies made a bit of a comeback. 2008, 2009, the US and Western Europe started drinking whiskies. They were behind the curve, actually. The emerging markets like China and India were discovering brown spirits long before the developed markets, and putting supply chain managers up in Scotland under all sorts of pressure when they were asked to crack open the cask of 12-year-old whiskey to be told that they'd been told to turn the taps off 12 years ago. So the cycles have been happening, and gin was very much a latecomer. It was obviously helped, it was kind of led, it's debatable where, in my mind, where it really started, Spain, the UK. I think the UK had some trailblazing developments. You had Smith lobbying for the changes in legislation that allowed for smaller distilleries to operate. You had Fever-Tree, and Craig will be talking the Fever-Tree story later, who created a premium tonic, making the whole experience more premium. And so you started to have this late renaissance in the gin market. Just to explain this, sorry, this is indexed versus the average between 1990 and 2000. Sounds very, very technical, but it's trying to show everything on the same scale. You can see how tequila has literally ramped away. It's very much a US phenomenon, but gin has been playing a pretty strong second place catch-up. Now, I'm wearing a room of experts, so my first bit of audience interaction is likely to end up with an entire room of hands, but just to check how knowledgeable we are, would anyone like to guess what the largest gin market by volume is in the world? Charles, I'm not going to. I'd rather hope you do know that. Anyone, but shout out some names. Excellent, good. I am in a room full of experts. Here's my first map. Unfortunately, for the colourblind, I've chosen a very difficult to differentiate shades of green. But green denotes the weighting of volume, and the Philippines, which you can just about see there, it's a huge gin market. But it is very much a value gin market. You've got a brand like Ginebra, which shifts 19 million cases of product every year. Just to give you a concept, it's about $2 a bottle, give or take. So it's not the sort of market I imagine that anyone in this room is particularly targeting right now, unless you wanted a volume play. Interestingly, in the Idelside data, you're really starting to see Africa come through. You can see Nigeria, for the geographers out there, will recognise Nigeria is there. Again, very much a value mainstream market. Chelsea Gin, 3 million cases, intercontinental distillers there, very, very successful. And then you've got the old stores, you've got the US, you've got the UK, you've got Spain. It's a sort of, it's the message here that I'd say is that everything is broadly a uniform shade. Gin has become quite a universal product, which is encouraging. It appeals to all sorts of consumer groups, all sorts of occasions. Now, it changes slightly when we look at the share of retail value. Another question, would anyone like a guess to think what is the most valuable market by retail sales for gin in the world? UK. Excellent, we are on top of this. It was last year, 2021, that it moved into top spot. Now the disappointment of that is the majority of that's going to the tax man. If you take tax out, then actually it's the US which is the most valuable market in the world. So as a distiller, don't be fooled by the retail numbers. A distiller, go after the net number. But yes, the UK took the top spot, so that's a whoop and a holler. Followed by the US. The Philippines is still up there. When you're shifting that amount of volume, there is a lot of value attached to it, even at $2 a bottle. But then you get markets like Spain, South Africa, Australia come into the mix. Now, what I like about gin is gin genuinely has premium credentials. The differentiation in vodka back in the 90s seemed to be how odourless, colourless could you make it through filtration. There was very little differentiating factors beyond the purity. How blank a canvas could you create to mix other drinks almost? I puzzled slightly at the time. Gin, on the other hand, with exciting, exotic, sometimes very expensive botanicals, really gives brand owners a chance to differentiate and present a premium offering for consumers. Now that's important because premium offering means premium pricing. Premium pricing, if you've got your business right, means premium margins. And premium margins hopefully means premium returns for your investors further down the line. That's the Crocker Gold route. Now, a few sort of health warnings. Spain, the fantastic development of the copper glass, the huge bowl full of ice, full of all sorts of extra additives in there. They were really wonderful serve of gin. Really helped the market take off, sort of mid-2009, 2010. However, I do have a warning about the Spanish market. And apologies to anyone from Spain in here, but there is a very clear 10-year cycle in Spain. In the 80s, it was brandy. Brandy gave way to whiskey, to Scotch whiskey for the next decade. When I first started in the industry, one of my favourite statistics, which I must confess I haven't fact-checked yet properly, but I was told that 70% of all Scotch in Spain was drunk with Coca-Cola and normally after about 3 o'clock in the morning in a nightclub. And that was the market you're tapping into. It wasn't the connoisseur market, it was the high-octane market. Now, Scotch, around the time of 2000, 2001, gave way. Rum was coming through at this point, very exciting. Venezuelan rums at the time, cacique and so forth. But then after 10 years, rum started to peter out, and that's when gin kicked in. Now, in 2019, we had obviously the gin boom, went to the biggest category. 2020, we had the on-trade close in Spain. Now, Spain's a very big on-trade market. Now, unlike the gin industry, sadly, 2021, we haven't seen a recovery back to prior year levels. Now, as a technical chartist, until a chart's actually broken a new upward trend, you can't say the market is fully recovered yet. So at the moment, it doesn't look like Spain has fully recovered yet. As it coincided with 10 years of drinking gin, the classic Spanish 10-year cycle, and you can barely make it out, but rum has actually recovered to above 19 levels. So maybe there's a rum resurgence taking place in Spain. I don't know quite yet, but beware the Spanish cycle. The UK, the other great driver of the gin industry, a great example of how flavours have been incremental, technical phrase, but bringing in extra volume rather than cannibalising traditional gin. You can see here that in 2020, gin, both non-flavoured and flavoured, got to nearly a quarter of total alcohol consumption in the UK. Now, if I'd been an analyst presenting that projection to one of my investors 10 years ago, I think I would have been laughed out the room, that sort of scale of growth. So the fact that it's come off, taken a bit of steam out of it, is probably not reason for concern. It's something to keep an eye on, because I imagine when you were setting out your business, Catherine, when you set up, 25% share of gin for the total UK market would have been your wildest dreams. I mean, it's been an incredible turnout, but just be mindful of that. Now, flavours, quite divisive. For traditionalists in whiskey, the idea of a flavoured whiskey is heresy, but it brings in new consumers. It's not the Jack Daniels drinker that switches to a Jack Daniels and apple. It's the person who doesn't like the idea of whiskey who goes, hold on a second, I might give that a try. And if you look at the data for Jack Daniels or some of the other US whiskies that have really embraced the flavouring cycle, it has been incremental. It's brought in new consumers who over time potentially then give whiskey a try. So as much as I think some of the flavour pioneers in the UK with Warner's and Rhubarb, the Pink and so forth, it creates a buzz and excitement around a category. Yes, you need to be mindful. I'm a bit of a purist. I do think juniper, I like the juniper there, but at the same time, if the consumer wants, it's often good to serve that. Yes, one other thing to mention, watching trends. I read a report by a major retailer recently looking at their 2020 report. You may well have read it, talking about trends in the UK spirits market. They mentioned tequila. Tequila is coming. I mean, it's been huge in the US. They mentioned vegetable-based drinks. They mentioned English wines. They mentioned low and no spirits, but there was no mention of gin. So keeping a category alive and vibrant and on people's consideration set is critical. Moving on. Now the good news, new engines. Yes, the UK and Spain have stalled, but if you look at the map of incremental volume growth, standard plus price gin, so I've taken out the really low end stuff in the local markets, you can see it's a pretty broad spread of growth. In terms of the interesting areas to flag there, companies like Diageo have a big footprint in Africa and Latin America, are seeding the gin category in markets like Brazil, Kenya, Nigeria. You're starting to see gin get interest out in those markets. In Europe, Diageo with Pernod, pushing hard, investing to open up there. Germany, Italy, Turkey. These are markets that are now starting to adopt gin. I mean, Russia was looking at a very interesting gin market, but obviously, sadly, is closed now to the industry. That was an incremental 200,000 cases that come out of Russia. And I was talking to David just before, David Smith, who's got a much more interesting set after me doing the tasting, but he's been trying some Chinese gins made locally there. And we were getting local gins in India that I'm reading about. So it was very concentrated growth to start with, but it feels like the category is now broadening its wings. But like any pop group or any aspirant business, breaking the US is everyone's sort of nirvana. That's where the crock of gold at the rainbow often is. Now, the US is an interesting market because it doesn't have the same sort of heritage of gin that say, that the UK does. It does have a premium story. I mean, Bombay Sapphire, back in the late 80s, under Michel Roux, really started to pioneer the idea of a premium gin. You had Hendrick's in 2000 come out with the cucumber-infused gin, which was really the first sort of flavoured gin. I'm saying to Craig, I can remember the moment I tried my first Hendrick's gin. It was a wet holiday on the Dorset coast. I had a 2-month-old child, and she wouldn't sleep. And the barman I just asked for a gin and tonic. He handed me this gin and tonic, and it provided not only the solace I needed, but I was like, oh my God, what's in this? Served with a slice of cucumber. I can remember that moment. So you had pioneers, but the problem in the US is other categories like tequila, the whiskies, have led the premiumisation charge. Now, what excites me in this chart here, and that's sort of the financial analyst in me getting excited on. But gin, if you go back to 2010, gin on a volume-weighted net price, so if you divide total revenue by total volume, was one of the lowest value spirits in the United States. It's starting to edge up. In 2021, on Discus data, which is the suppliers group in the United States, gin has now moved ahead of vodka and rum. And that premiumisation story in the US has huge potential. And you've got big players like Diageo pushing Tanqueray 10, trying to get the category and the serve right. So, crocks of gold, how to find them. When I'm looking at in sort of spirits categories or businesses in general, concentration is critical. There's been a lot of talk about fragmentation in the market. Charles quoted 2,000 gins, 35 pages. Gin's at an interesting point because of the scale of the multinationals, Diageo, etc. It's still quite a concentrated industry worldwide. This is a concentration index. In finance, we always come up with overly technical phrases, but it's the Hirsch-Herfindahl index, which is the sum of the squares of the market shares. It's just the higher it is, the more concentrated a market. Now, you can see that aged categories or ones where supply is difficult to come by, like tequila and whiskies and brandy, are concentrated categories, and they've stayed concentrated over time. They have, in the context of the industry, good pricing power, good gross margins, and make good returns if you're patient to tie up your capital. And this has come up a few times, financing and so forth. The issue with, you have to pay for that sort of barrier to entry. I always sort of jokingly say there's only one way to make a 12-year-old whiskey, and that was 12 years ago. And that puts off a lot of investors and entrepreneurs because you've got to be patient. Often, it was mentioned, I think Kath mentioned, often people create a gin to fund the cash flow before the whiskey matures. And actually, gin, if you get it right, is wonderfully cash generative. You sell it when you make it, you can get very good gross margins. And often the whiskey gets forgotten about a little bit and the gin takes over. Vodka and wine give you a bit of a warning. Vodka, hugely successful category, but fragmented massively. A lot of brands came in. You've had price wars in the US to try and protect volume, and it's been a difficult category. Wine is notoriously difficult to make money. If you want to make $1 million in wine, you start with 2. Those sort of stories. So gin's at this interesting point. It does feel like you read the statistics, number of distilleries in the UK. When I first started out, there were 20 distilleries in the UK in 2000, I believe it was. If you read I'm a bit of a whiskey historian. I love all that. I'm mindful I'm in a room with far more drinks historians, but I love reading the history of the industry. Barnard's trip around. There were hundreds of distilleries. They contracted down, and now we're expanding up to, it was slightly less than 600 last year. I don't have the numbers for this year, but it is an industry that is fragmenting because it's fun. It is exciting. You see the passion that founder brand owners have. So watch out for that. That is key at the moment for gin. But I suppose the good bit of news, I saw on the list we have people from Diageo, from Pernod Ricard. Gin isn't the biggest part of the portfolio. It's not the most profitable part of the portfolio. Things like Scotch, cognac, beer, they are sort of the workhorses of these businesses ultimately. But if we look at some of the big multinationals or players in gin has become a more important part of the portfolio. It's still single digit, 8% roughly on average of volume. But importantly, like all financial charts, they go up as you go to the right. So it's more of sales. And for everyone in this room, probably the most important fact is it's even more of marketing. And these guys are trying to grow the category. They're obviously trying to grow their brands as well. But part of that is education and getting people to understand gin. And in terms of crocks of gold, a lot of this is being funded organically, but we've seen some pretty big acquisitions recently in gin. Things like Bombay Sapphire was bought many years ago, almost as a side part to the Dewar's acquisition by Bacardi. but I'm sure everyone's read about Diageo's $600 million purchase of Ryan Reynolds' Aviation Gin. It helps if you're an A-list celebrity when you're starting up. I didn't see that on Charles's list, tick list. It does help. But they're trying to mirror the success they've had with George Clooney's tequila, and it was a successful acquisition by them. Pernod Ricard and Brown-Forman have been moving in slightly smaller scale with things like Monkey 47, Malfi in Italy, Ford's, which was referenced earlier. But I suppose to conclude, one of my favourite sort of gin investment stories is Remy Cointreau with The Botanist, which has been a phenomenally successful brand. And I remember visiting Bruichladdich Distillery before they'd bought it, and sat in the corner was this little still, Ugly Betty, they called her. Originally a Scotch still, I believe, if my reading's correct, made in 1959, that was repurposed to make gin. Now, when Remy bought Bruichladdich, as far as I'm led to believe, Ugly Betty was not captured in any spreadsheet as part of the value equation. And when the owners of Bruichladdich were looking, discussing, it was pointed out that Ugly Betty, there must be some value to Ugly Betty. Well, on my estimates, last year, The Botanist sold more in revenue than the Bruichladdich whiskies. So get the brand right, get the story right, get the product right, and I think there's a huge opportunity out there. Thank you.